Welcome to Wealth Well Done. Together, we'll cover a wide range of important topics surrounding money and the impact it has on our lives. From the sophisticated and highly valuable planning techniques of the ultra-wealthy to the commonly underutilized biblical teachings. Together, we'll work to improve our relationship with money and our effectiveness in stewarding it well. Here's your host, Eric Scoville.
All right, welcome to the 17th episode of the Wealth Well Done podcast, where we help you do your tactical, practical, and spiritual advice to do your wealth well done. Last week, we had Chuck Day on as we did a deep dive into the International Justice Mission and the work that they're doing there from a human trafficking standpoint. Today, I'm very pleased to bring Mike Morawski on. Mike is a longtime real estate professional that's going to bring a high level of expertise to this call today for anyone who is interested in investing in real estate. So typically, first of all, I got to do the disclaimer here because we're going to get into actual advice. So any of the advice that we do have here this is generic in form. This is not meant to be specific to your situation. So we ask you to please balance all this out with your financial team to decide what makes sense for you. But nothing in here is meant to be advice for you individually. So typically with this, we spend very little time in the background of our guests per the recommendations from our producers. But Mike, your background is extensive when it comes to real estate. So I'm going to just lay that out there for a little bit for everyone to see. So you've been in real estate 30 plus years. You were a residential realtor up in Chicago for a while, built a pretty large team and had a successful team there. You have built a very large property management business. You have your own podcast around Mike Morawski's Multifamily Unplugged. You went from 0 to 300 doors in just a matter of a couple of years. And then now you've also been in syndications. You've done over, it looks like, close to $300 million in syndications that you've done. And you have you've got a coaching business. So when it comes to real estate, Mike definitely brings a high level of expertise to what we're doing here. So sorry if I got any piece of that wrong there, Mike, but
you're good.
Pleasure to have you on the show.
Hey, it's a pleasure to be here. I've been looking forward to this, Eric. Thank you.
Yes. All right. Jumping right in. So obviously with that type of background, how did you get your start in real estate?
That's a great question. And it's funny because before the show, we were talking about your background in construction.
Yes.
And that's where I came from. I came from the construction industry. So funny story, I had a swimming pool company in Chicago. And, if you know anything about having a pool company in the Midwest, it's, you only work 3 or 4 months a year. So
right. And you work hard.
But I'd hire these guys in the springtime. I'd train them, spend time with them. They'd work all summer. And come fall, I'd put them on unemployment and thinking they'd come back the next year, and they wouldn't come back. They'd go get another job. And
right.
So I was in this constant training and trying to retain people. I said, I have to do something different. So I started doing kitchen and bath remodeling in the off season. And before I knew it, I was building, 25 room additions a year.
Wow. Okay.
All on the residential side. But Eric, like any good entrepreneur, you do everything. I was
right.
marketing, I was sales, I was writing contracts, I was ordering material, I was hiring guys, firing guys, making sure trucks and equipment were serviced, bookkeeping, and plus I was in the field still banging nails. And I'll never forget vividly waking up one morning, sitting up in bed, looking at my wife at the time and said, I can't do this anymore. I'm done. I was just burnt out.
Yeah.
And I was fortunate I had somebody knocking on our door to buy the company. So I decided to sell the company and I took a year off. So, again, like any good entrepreneur, you never take time off, right?
Right.
So
your mind didn't stop when you took your time off.
So I said, well, you know what? Let's buy a couple buildings and we'll rehab them. And I house hacked a couple of 2 flats long before it was sexy.
Yeah.
And, today everybody house hacks. They live in their place, they fix it up, they sell it and move on to the next one. But back then people were like, you're doing what? you know?
Yeah.
So during this time, I met a real estate agent who was extremely successful. And I liked what I perceived as his lifestyle, his work ethic, his business he built. And I went to him and said, "Hey, Todd, I think I'd like to go in the real estate business." He said, "I think you'd be great at it." And so he encouraged me to go into business. During which time I asked him, I said, "Hey, could I shadow your team and see how he goes?" No, he goes, "I'm going to do better than that. I'm going to make a cassette tape for you to listen to and take all my strategies."
Okay.
And I listened to that thing over and over again and went in the real estate business, and it was a home run.
Okay. All right. So you've seen some pretty high mountaintops in this business, from, the realtor and being a realtor and realtor team, being the landlord, being a property manager, syndicator, having your own private equity firm. Like, was this a progression for you, or did you just kind of go wherever the opportunities led?
Yeah, it was kind of a progression because, when I went in the real estate business, my first 9 months into business, I sold 78 houses. I went on to build a team selling 125 houses a year. And I did that for like 12 years.
Wow.
2005, I saw the market starting to shift and had always wanted to be in the apartment business. So I decided, hey, let's go in the apartment business. And so I started syndicating then. So it was kind of a progression,
Yeah. Okay. So now you're a coach. So you help coach people. Can you give a background onto who the type of people that you coach?
Yeah. So, before I answer that for you, I want to say this. The only reason I'm a coach is because I've been coached for over 20 years.
Yeah.
I've had personal coaches in my life that have held me accountable to business activities, which have helped my business grow, but as a result have helped me to grow personally. So I don't believe any of us grow professionally unless we're growing personally.
Oh, man.
Whether that be spiritually, whether that be physically, however that is, we have to grow personally to grow professionally. And I don't believe that any of us grow just strictly on our own. There has to be, there generally is some type of mentoring, coaching. Jim Rohn said years ago, success leaves clues. And so if we look at other successful people and we model them and we model their success, we can be successessful too.
So Jim Rohn didn't say success leaves clues in that type of voice, though. He would have said like, success leaves clues.
Yeah.
He's good.
Yeah,
I love
right.
Jim Rohn.
I
don't
Jim
run
Rohn.
into many people that have listened to the wisdom that he shares, but man, that guy has a lot.
Well, I'm old, man. So I love Jim Rohn and Zig Ziglar and, as much as I love Tony Robbins and, but there's mentoring in that, right? There's coaching in that if you listen to that. So anyhow, my first coach was Todd, right? He made me this cassette tape, and this cassette tape, had the fundamentals on it. And I really equate that to these podcasts today, because you could download this podcast we do, go back and listen to it over and over again. And every time you listen to it, you're going to hear something different. You're going to get a different piece of advice. You're going to look at things differently. And as long as you take action and implement those golden nuggets into your business, there's nothing that you can't accomplish.
You are absolutely correct with that. And the coaching that's available to anyone there's just no excuses anymore. At least in the Western society or anywhere that has access to a cell phone or the internet, there's just no excuse anymore. And to back you up on your age, my first coaching experience was actually Jim Rohn's coach. So Earl Schoaf. He had an old recording called How to Become a Millionaire. And so that was the guy who got Jim Rohn started, who then obviously led into Tony Robbins and all of the people. The ripple effect of good coaching is beyond measure. So
hey, you want a real flashback? go and it's floating around on YouTube right now, but go and look for The Strangest Secret by Earl Nightingale.
Yes.
That is, when you listen to that and you listen to some of the coaching and training today, nothing's different. It's just a different, how somebody says it differently. Like you said, hey, Jim Rohn would say it this way, right?
Right.
It's just a different way that something's been said. And then the execution around it. But I listened to that the other day, and it was pretty interesting.
Well, and so much of this is the coaching that is available today. It's interesting how much people come up with these revelations that were written down in the Bible thousands of years ago too.
Yeah, right. Exactly. So,
all right. So back to real estate here.
Back to the question.
Yes.
The question was, who do I coach? Right. And, I want to coach people who want the multifamily syndication business as much as I do.
Okay.
Because I know what that business can provide for people. I read a book one time by Gary Keller called The Millionaire Real Estate Investor. And when you open the book, the first quote in the book is financial wealth. And what's financial wealth? And financial wealth is living your life mission on your unearned income. And so I want to teach people how to either invest passively or actively in multifamily real estate because of the economies of scale.
Right.
And here's the disclaimer or whatever around that. But I think that, living your life mission. What is your life mission? Hey, somebody might have a mission that they want to own a Rolls Royce or have 10,000 units. That's okay. What are you going to do with it when you get there, though? Right? So maybe your life mission is to support human trafficking,
right,
to support homelessness, to build a well in Africa. Whatever your life mission is, I think that multifamily real estate gives you the passive income ability to be able to do that. So I want to coach people who want that same vision and know that they can get there. So
is that even for people who are just getting started? Like, hey, I've bought one single family rental so far, and I'm getting ready to buy my second. Is that still the fit? You're just saying 100%. Someone who's got the vision, the growth.
Yeah. Okay. I want people, if somebody's in the single family space and they want to transition into the multifamily space, absolutely. It's a different transition, right? I sold residential for years and went in the apartment business. And I thought, wow, this will be an easy transition. But there was so much I had to learn. Hey, Eric, the first time somebody said NOI or yield curve to me, I was like, what?
Right.
So I had a lot to learn, right?
Absolutely. I mean, as a financial advisor, when I first started getting into real estate, like I didn't know the lingo. And also because they don't teach financial advisors anything about real estate because, a brokerage firm can't make money off of that. Okay. So inside real estate, you have many different businesses. We talked a little bit about this before of what you did inside your construction company. You were in charge of all the different, call it verticals, the different businesses inside that construction company. Obviously, real estate is the same way. So what of the businesses inside real estate do you like?
Yeah. So, as I mentioned earlier, there's a bunch of moving parts in a real estate syndication business, whether you're scaling a small multifamily 2 to 4 to 20 unit portfolio, and you can build great wealth in small multifamily, and you can build great wealth in large multifamily. So wherever you're going to play, whatever playground, I think the fundamentals are the same, and they all revolve around the language in the business, the relationships, the finding the best deals, choosing markets, underwriting, due diligence, operations. There's a number of moving parts, but I think that there's 3 key fundamentals that are incredibly important. And the first one is relationships, building relationships with people. You got to have relationships with brokers and lenders and insurance people and other vendors. You also have to have relationships with passive investors, LPs. For private equity. You have to have relationships with key principals, other people that have more experience than you that can join your team. So there's a whole team building aspect of that relationships.
Yeah.
And then it's the underwriting is the second piece. Underwriting and knowing how to analyze a deal and looking at the math. And I always say in analyzing, Eric, there's, if you ever watch the Christmas Story, there's three ghosts, right? The ghost of Christmas past, present, and future.
Yep.
It's the same thing analyzing a deal. You got the ghost of the numbers of the past, the ghost of the numbers of the present, and then what are the numbers of the future? So that's the underwriting. And underwriting's just a fancy word for saying analyzing. But then the third piece is raising private capital. And I believe there's a whole strategy behind raising capital, raising private equity to be able to fund your multifamily syndications that you would syndicate or bring to the market. And just so listeners understand, syndication's a fancy word for saying, hey, we find a great real estate deal, we find private equity, and we marry the two together and stay in the middle and operate those deals.
Yeah. Okay. We're gonna get into syndication here just in a few minutes. I want you to share with the listeners the type of syndications that you currently have on the table. When it comes to these businesses that are all these different types of businesses that live inside the single business of real estate, for the clients that you're coaching, at what point do you recommend that they start? I'm going to call it subbing out from the contracting world, but they start handing off these other responsibilities. So if they don't like property management, or if they don't like just marketing and any of these things, so you can pick any of those different pieces inside that business. At what point do you suggest that they start handing that off?
Yeah. So find out what your strengths are. Everybody is really strong at certain things. It could be construction. It could be finding the deal. It could be the underwriting. It could be raising capital. But find out what you're really strong at and good at. Get the best you can possibly be, and then you can add value to a team. So either get yourself injected in a team where you bring that strength to the team, or go find other team members that are really good at the other stuff.
Yep.
So here's what I did in my life, right? Is I know I'm really good at those three things: building relationships, underwriting, and raising capital. I'm really good at that. And I'm really good at bringing all the moving parts together. So I had to go get a partner who's really good at all of the details. I'm not a detail-oriented person. I'm a big picture visionary.
Yep.
But I needed somebody who could handle PPMs and LLC agreements and insurance and funding and investor portals and investor documents and moving parts and all those little, who's tracking the utility bills and those types of things, right?
Right.
So I went and got a partner who was really good at that. And then I went and got a partner who was really good at sourcing deals from the brokers that I built relationships with. And he'd get the deals and start underwriting deals. And then we'd get in and tear them up. But he took that first piece, that first pass at a deal. So now the three of us work really well together on those functions. And then on the back end, we work really well together. So figure out what you're really good at and go find other people that are good at those other things to build a team for yourself.
And you recommend doing that pretty early? I've got 2 properties under my belt and I'm realizing that I don't like blank. So therefore, start looking for partners or looking for other people to fill that gap.
That's a great question. And how I would address that is, what are your goals? What do you want to accomplish? Let's get really clear. So this is where coaching comes into play, right? My couple of first initial coaching calls with somebody is, hey, let's drill down and figure out exactly what your passion is, what you want to accomplish, and then let's build a plan around going there, right? So if you say, hey, look, I want to buy 500 units because I want to take the passive income from that and support this cause and this cause, or I want to buy 5,000 units and scale my business. Now we can build a plan, right? But I think it starts with clarity. Know what you want to accomplish, have a clear vision for that, and then you can build a great business plan around executing. Once you do that, now you can figure out what you're good at and then figure out in your plan how to go and build that team that's going to be, that's going to all come together to accomplish your goals.
Yeah. Okay. In your coaching, so I'm going to ask you some specific questions they're just on the mind of kind of I always get a lot of landlords right now, but and I want to know, do you address these type of situations with your coaching? But insurance rate hikes, that's the thing that people are dealing with. I don't say completely across the board, but certainly, I've got a lot of clients who have properties in the Southeast, and so they are seeing massive rate hikes right now. How are you, like, do you address those with clients? And here's what strategies you'd recommend to handle that? How much of that's getting passed on to their tenants?
Yeah. So, it's hard to pass it on to the tenants because, listen, Eric, we own a property in the Southeast as well. And, we underwrote that at $850 a unit. When we took possession 90 days later, it was $1,250 a unit when we closed on the deal. And then we just got renewed at $1,550 a unit. So it's hard to go back into your tenant and go, hey, our insurance went up. We got to raise your rent $100 more than what we're already raising it or what you're already paying. So it kind of comes to the point where you have to mitigate that. And, where else do you cut? Yep. Where else do you do things that help you kind of reduce that?
So drop margins for a little bit here while we weather this and let it be a more steady progression into building that back into your costs.
So Eric, if I was coaching you today and we were looking at syndicating a deal, okay, so I have a couple coaching programs, right? I have a group program and I have a one-on-one program. And let's say you and I were coaching one-on-one and we had gone through the underwriting process and you're now sourcing deals and underwriting deals. And you go, all of a sudden you go, Mike, I found a deal. I think we should do this. I go, great, Eric, let's look at it. You and I partner together on that deal, right? I love to partner with my coaching clients and help them be successful. So I want to bring enough content and enough information to help you do your first deal or do your next deal. And I want to be your partner in that. So what we're going to look at is we're going to say, okay, we know Florida, Galveston, Texas, Mobile, Alabama, Baton Rouge, Louisiana, these costs are going up and up and up in insurance. Let's project for that. Remember, I talked about the three ghosts, right? Past, present, and future. When we look at that future ghost, let's say, okay, we know that next year and the following year, our insurance rates are going to go up. How do we plan for that? And how do we look at that in the underwriting so that we can stress the deal, so that we can still bring a deal to the market that's going to pay our private investors, a mid to upper teens return, and not cause us to have stress or have to go back and do a capital call or to have any challenges, right?
Okay. All right. One more kind of more tactical piece of this from you, and then we're going to get into your syndication. The property management. So for people who are scaling, property management is this massive bear. Sometimes it's pretty ugly. And so couple questions here. So first of all, what type of person is cut out to be in property management?
There's a bunch of functions in the property management business, right? You've got leasing, you've got managing, you've got maintenance, you've got sales. So let's just talk about the property manager right? The person who's running the property, the operations, the on-site staff. It's got to be somebody who can manage a bunch of spinning plates because there's all kinds of things going on at one time every day.
Right.
It's got to be somebody who has a temperament to be able to deal with people and listen to them complain and yell at you maybe. It's got to be somebody who knows how to get things done quickly, who's responsive, who is somebody who can uh, change quickly, right? You might be going north and all of a sudden you got to make a change and turn around and go back south. So it has to be somebody who can adapt to a changing environment because you could come into work at 10 o'clock one morning and everything be going smoothly. And all of a sudden, the weather changes and lightning strikes a building. And now all of a sudden, everything else is in an uproar.
Right.
So how do you mitigate those types of things, right? So, I think the person in the property management business, and Eric, I had vertically integrated a property management company. We managed like 7,500 units.
Yep.
And I had some really good people that ran that business, but I didn't like it. I don't really, it's a necessary evil. It's it's a means to the end, but it's a tough business. And my hats go off to property managers who have that temperament to deal with the things that go on.
Yeah, that's helpful because I think of a lot of the people who are having real estate be their side hustle that think they're going to manage a property, they're just going to manage them. I think they typically get a few units in and then start to realize just how much work this actually is. So,
Yeah.
Okay. So I've got a dear friend who is a year into they're forming their own property management company. So they've got a lot of doors, and they finally went ahead and did it themselves. And the way he's described this past year is not pleasant. But now here they are a year later, and they are they're seeing the fruit of their labor, and it's been good. When you talk about the idea of the necessary evil, obviously someone has to do it. What type of margin? So I'm thinking of the person who's maybe got 20 units or so that they manage right now, and they've hired them all out to a local property management company, and they're deciding if maybe they should go on their own with this. At what point, what type of margin are they talking about recouping by bringing that in-house?
You mean an operator, a syndicator, a property owner that all of a sudden decides I'm gonna bring my property management operations
Sorry,
in-house?
Not so much a syndicator. When I say units, I mean doors. So someone who's got 20 doors that they manage, that they've been that they own, and that they have been subbing out that management to another property manager. How much money do they stand to recoup if they bring that in-house?
Well, you know what IRR is.
Sure.
That's the time value of money, right? So when we do a calculation, it's time value of money. So you have to look at the time it's going to take you to do that extra job to save 5 to 7%.
Yep.
So when you talk about 5 to 7%, plus now it takes you an extra 20 hours a week, are you really bringing that 5 to 7% in house?
That's the exact answer I was looking for, just to help people bring that into scope.
Yeah.
Okay. Let's switch over to syndications here. The type of syndications that you're doing, and I gave you full permission to sell this. You don't have to be bashful about this. You have syndications that you have available for people, just like you have coaching that's available for people. There's a reason that we brought you on, Mike, and that's because you're able to bring value. So, first of all, for your syndications, do you focus more on an MSA or a specific vertical? And then can you walk us through a syndication that you either have available today or that you have coming down the pipe?
Perfect. Thanks for asking all this. So you're right on. I'm a market-driven investor. So I will not invest in markets that don't make sense. And here's what I look at. And I have about 8 different market traps that I look at before I make a decision on a market. And if I can't check all the boxes, and all but one of those is negotiable. So if I can't check all the boxes, I don't go into that market.
Okay.
The population growth has to be strong. So I have to be seeing a constant trend going north in population growth, because population growth spurs on job growth. And if population is growing, I know there's going to be a demand on jobs, so it's going to cause job growth. And then job growth is going to cause another demand on income and household income going up. So if I have to check those three boxes first. And then my other things are like crime, schools, demographics, employment diversification, and new units on the or coming online. So those are my boxes. I got to be able to check all those and say they're all good to go. So I have a rating, red or green. Red is stop, green is go. As long as I can check all those green, I'm going to move forward to the next piece, which is look at a multifamily deal. Now I have a pretty specific buying strategy around the multifamily that I syndicate. And I want people to understand that you could syndicate any type of real estate deal. It's an alternative investment, whether it's single family fix and flips or whether it's office, retail, industrial, but I'm a multifamily guy. And then when you look at multifamily, there's a bucket there. And in that bucket, you have senior housing and mobile home parks, and you have self-storage, you have tax credit deals and affordable housing. I'm a market rate rent multifamily guy. I like to be able to raise my rents and not have any restrictions or hair on doing that.
Okay.
So with that said, here's what I look for. I look for 150 to 250 units in size in a primary market, typically the South or the Southeast, that has that's garden style, 2 to 3 story units, pitched roofs. I like to have 1.5 parking spots per unit or more. I like to have a strong mix of 2 to 3 bedroom units, over 60%. I'm not a big 1 bedroom or efficiency guy, although that's a negotiable because there's markets that makes sense in. I like to have limited amenities and value add. So I want to be able to go in and either turn the operations around or turn the physical component around to be able to put new tenants in place and raise my rents. So that's kind of my overall strategy. And Eric, my mission in that is to bring safe and secure housing to my tenants. So my mission in the syndication business is to provide safe and secure housing to my tenants because, there's a lot of single moms, there's a lot of single parents out there, and I want them to know that when they come home, when their kid comes home from school and the door closes behind them, that somebody's not chasing them down the hall, gangbanging them, selling them drugs, selling them guns, or trying to get them into some kind of human trafficking.
Yeah.
Right.
Wow.
So I want to provide an environment that's safe and secure for my tenants. So we look at that. Now, that's the first kind of glance at a property. Now we look into the financials. And again, I'm looking at the ghost of the present and the ghost of the future a little bit and seeing what I'm going to be able to do with that property. As long as I can bring a property to the market for my limited partners, so my investors, and I bring investors in and we share in the profits with those investors. Our private investors get the lion's portion of these investment opportunities. So if I can't bring a deal to the market today, and Eric, I'm extremely conservative. I mean, like 0 rent growth and then moderate rent hikes. I'm very conservative on the length of time, the construction costs, my rent, increases. So I'm very conservative because I know today we're in an environment that's a little questionable. But I have to bring an offering to the market that is at least the mid-teens return. What I mean by that is my investors will make about 15% a year on their money or more, and are going to see a preferred return of 6%. So here's what that means is that you're going to get paid 6% along the way, And the balance of that 15% would come as a promote when we sell the deal on the back end. So that's my baseline. If I'm below that, if I can't get a better price or make the deal work, I don't do it. No matter how nice of an opportunity it looks like it could be, because I don't bank on appreciation. It has to be about cash flow, and it has to be about the cash flow today, because I know if I can increase cash flow and increase my NOI, my investors make more money on the back end. So the profitability is there. I'll give you an example. We're doing a deal right now in Tulsa, Oklahoma. I was able to check all the boxes on the market drivers, the fundamentals, and where the market is headed. So it's a very strong economic market, Tulsa, Oklahoma. I found a deal, 277 units, Class C value add property. We're going to go in, we're going to put $2.3 million in capital improvements in the property. And we're going to put new professional management in place. Matter of fact, our property manager on that is the third largest property management company in the country, and really knows how to turn assets around.
Okay.
So they're going to be our partner in the deal. Our investors will see returns of 17% a year on that investment. They're going to get 7% preferred return along the way on an annual basis, paid out quarterly, which means that the multiple is how much your money will grow over that period of time. So in 4.5 years, our investors will hit over a 2 multiple, which means they'll double their investment. It's projected to double their investment in that opportunity.
Yeah.
And here's the good news for the investors is you don't have to deal with all the moving parts. You're not dealing with tenants, trash, and toilets, right? All those day-to-day activities. You don't have to have the temperament of a property manager to deal with that, right?
Right. Yeah, that's the beauty of syndications, and the operators need the LPs, the investors, and vice versa. So
yeah.
Okay. How do listeners get a hold of you, Mike? How do they find out more about the deal, or just get a hold of you about coaching?
Yeah. So anywhere you hang out on social media, you can find me, whether it's Instagram, LinkedIn, Twitter, TikTok, you can find me. We're always putting content out there every day. I'd like to invite listeners to go join my Facebook group, which is Multifamily Unplugged, where I'm always keeping people updated about offerings that we have or programs coming up, or my YouTube channel. Either way, connect with me there, or connect with me directly. If you want to talk to me, you can send me an email. I'll send you a copy of an ebook on passive investing in apartments. I have an ebook that people can go to, can email me directly, and I'll send you a copy of that book.
Okay. All right. Mike, thank you so much for the show. Next week, we are going to come back with a second episode with you, where we are going to dig deep into your redemptive story. So listeners here, Mike has a phenomenal story that we didn't touch on at all today. So we're going to dig into that next week. As always, if you're finding value, please share, please subscribe, and we will see you next week.
Thanks, Eric.
Thank you again for listening to Wealth Well Done. Be sure to subscribe to the show on your favorite podcast player, and together we'll continue to improve our relationship with money and our effectiveness in stewarding it well.